Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks and investing with dividend stocks for weekly and monthly cash flow. Today is Thursday, September 14th, 2017. It's 11 p.m. and we are just getting started. Today's Thursday and tomorrow's Friday, which is options expiration date. It's the third Friday of the month. Okay, the first was the first Friday, and the 8th, and now the 15th is the third Friday. So all monthly options are going to expire tomorrow. Now, this week we did quite a bit of option trading, and let's see where we stand. Also, don't let me forget that I'm going to be answering a question that one of my long-term subscribers asked. He wanted to do some investing and continue his 1% per week. I said, hey, that's great. Let's do some options. He said, I don't want to do any options. Okay. Alrighty then. Well, that being said, let's take a look at a couple of simple, easy options. Because investing for, just capturing the dividends, yeah, it's going to get you the 1% per week. But if we jump up and we use some options also, we can jump up to 2% per week or 1.5% per week and still not risk very much. The option that I'm talking about is the covered call. That's where you buy the stock and then you sell someone the option to buy it from you for the exact same amount you paid for it. How does that work? Let's take a couple of examples. Tomorrow, CAH, or better known as Cardinal Health, is going to be on our list because they have their dividend going to be paying out on the 29th, which is 10 days from tomorrow. So, if we bought the stock tomorrow, look at CAH, and bring CAH up over here so we look at what we're looking at. Whoa, kind of all over the place. All right, CAH starts out the year at 67, 68. Moves up. It takes about 3 months or so to move on up to the high of the year of 91, almost at 92. Flounders around a little bit. This thing basically between 74 and 90 almost all year. Up and down, all over the place. Anyway, that being said, here's where she is the last 90 days. She took a little bit of a dip right here on double. That looks like almost double the volume. Found a low at 64, bounces off the low, and had a couple of nice up days to where she is now at 67. Now, let's say we find another stock, because this one's kind of like all over the place. Quickly look at, before I do that, let's quickly look at the seasonality and see what that says. Okay, here's the seasonality for CAH. Okay. It looks very erratic, and that for trading is it's good for the premiums because the premiums are high for erratic stocks. However, it doesn't make me sleep well at night. So let's not do them. Okay, let's just not do them. All right, that's the 29th. Which means we'll be jumping into October, the first week of October. What do we have? Oh, Comcast, right there. Everybody loves Comcast. CMSCA. Okay, that looks lovely. All right, quickly look at the chart. on Comcast. Nice. Comcast starts the year at 25. Nice slow growth to 30. Trades sideways for quite a while in the 30 range. Slowly moving up till it hits a high of 42. And where she is now, that's a huge drop. Wow. Why did she drop on Monday? Because Monday, Tuesday, Wednesday, 3 down days in a row. What could that be? I don't know. We got a triple bottom going here. Look, it says low here, there, and here. It may even drop back down to this level here, back down to 37. Anyway, that being said, it doesn't look half bad. Look at the seasonality for this Comcast. That looks lovely, my friends. Okay, sideways, basically sideways. All right, I like that. Let's put in here CMSCA. Let's try it again. CMCSA. Try that one. Oh, righty then. Okay, we get one more day for CMSCA, which is Comcast. 37.60 is where it's at now. Now, funny thing is, I could buy Comcast first thing in the morning at 37.60, and then I can turn around and sell the 37.50 spread. I'm not spread. Sorry, the 37.50 call for 23 cents. Not a lot, but the way it would work, okay, if all these numbers were true and accurate, I could buy the stock at 37.60, turn around and let somebody buy it from me at 37.50, which is a 10-cent. Wow, which is a 10-cent loss. But is it really a loss? No, because what's happening is you're buying it for 37.60 and someone else is buying it from you for 37.50. But you're also collecting 23 cents per share. Okay? So that's kind of like buying it for 37.60 and selling it for 37.73. Getting 13 cents right there. Okay? Now, it's not a whole heck of a lot of money, but it's only one day. If we brought this out 8 days, for next Friday, the 37.50 is worth 45 cents, which you're buying it for 37.60 and you're selling it for 37.50. Plus, you're getting a 45-cent incentive or option premium for someone to buy it from you at 37.50, which is kind of strange if you think about it. Or you don't like that one, you could sell the 38 for 21 cents. If she goes up to 38, great, you get 21 cents. I can't believe it. No matter what time of day I turn this computer on, as soon as I turn on the video camera, I keep yawning. What is that all about? I hope somebody knows. Let me know. I can't figure it out. Sorry about that. Okay, so the covered call, basically you're buying it at one price, letting someone buy it from you for the exact same price, and collecting a little bit of premium. So the dividend on Comcast is only 15 cents. So if you could do it tomorrow morning, right here, buy for $37.60 and sell for $37.50 and collect the 23 cents, you're collecting 13 cents right off the bat. It's like one day. And then you can do it again on Monday. Do something else. You know? So who's coming out on Monday? Okay, look at GPS, that the gap, I think. Yeah, that is the gap. All right, let's look at the gap. GPS. All right, this is only going to go sideways for about a week. Then she's going to go down. Do I want to do that? I'm going to say no. Costco. Oh, sorry. Cisco Systems. It looks like it could be Costco. Costco. Could be, but no, it's Cisco Systems. All right, CSCO. CSCO. All right, CSCO has a seasonality that looks like sideways for a little bit and then to the downside. Is that Eagle Outfitters? American Eagle Outfitters, okay. American Eagle Outfitters. Let's take a look at them. AEO, AEO are the vowels. Okay. They're going to go up the next week. BMY, Bristol Myers Squibb. BMY. Come on. What are we doing here? BMY. Bristol Myers Squibb. Alright, that looks good. A little bit of an uptrend, then she's going to go sideways. Bristol Myers Squibb looks pretty good. Let's see what the regular chart looks like. Regular chart for Bristol Myers Squibb. Okay. Starts out the year at 50. Goes about 2 months at 50. Jumps on up to 60. Trades there for about a month. Jumps on up to 65. Trades for about 2 months at 65. Back down to 60. Back up to 65. Back down to 60. Back up to a high of the year, which is 77. She gaps down back to 60 and settles into a 55 trading range, and she's settling at 62 at the moment. So Bristol Myers Squibb looks good here. Okay, seasonality looked good. She's got the dividend coming up in the next 2 weeks. Actually, this is 2.5 weeks because this is up for next Thursday. Let's see what she's offering for some option trades. BMY. BMY. Okay. She closed at 62.63. Okay, 62. Same thing. You could buy this thing at 62.69, which is about 62.70. Turn around selling it for 34 cents, which you would be collecting an extra 13 cents over and above what you paid for it. Okay, so you buy it for the 62.69. That's what the last trade was. The bid is 61 and the ask is almost 64. When they open up tomorrow, most likely to come up with a tighter number. The after hours bid and ask is usually really skewed, really not very accurate, because the market maker for some strange reason doesn't want you to do some kind of testing or do a little research with these numbers so far off. Because to be honest, the market maker has no clue what he's going to open up tomorrow at. All we know is that she closed today at 62.69. But just because she closed at 62.69 today doesn't mean she's going to open up at 62.69. So for doing a covered call, just as an example, if you bought it at 62.69, okay, you get two choices. One, you can sell the 63 at 12 cents, and then you can collect the difference between what you paid for it and the 63, and you get to collect the 12-cent premium. Okay? Or you could just buy it at the 62.69. Yawning again. And sell the 62.50 and collect the 34 cents per share. And then by tomorrow afternoon, if it's above 62.50, someone's going to buy you out. If it drops below 62.50, you now own it. And the nice thing about that owning it is that in 15 days, this thing's going to have its EX date, which means they're going to have their dividend. And the dividend for BMY is 39 cents. Okay? So BMY looks good, always has looked good. Bristol Myers Squibb is a great company. Yeah, they've been around for a long time. But yeah, if you wanted to, no, I personally would do the vertical spread and do this one right here, because that would give me close to a 40% return for the week. Okay? Now, but that's just the option spread. That doesn't do anything with the stock. Okay? And if the stock goes down below the break-even point, all that money's lost. A covered call doesn't do that. A covered call, you own the stock. You buy the stock itself. Okay? You buy the stock itself, and then you turn around and you sell the option for someone to buy it from you for the exact same price you paid for it. And the nice thing about that is if you get called out, you collect that money tomorrow. And it's better than waiting around for the dividend. And besides, you can always jump in and do the dividend again anyway. Okay, that's for one day. I mean, you can catch a little bit of a return for one day. Buy the stock, sell the option for someone to buy for the exact same price. Buy first thing in the morning. First thing in the morning, you buy it, and the very first thing in the morning, you sell someone the option to buy it back from you for the exact same price you paid for it. And it's profit no matter what you look at it. Okay, that being said, let's see what it would look like if you sold next week's 62.5. Okay, so you buy it for 62.69. You sell it for 70 cents. There you go. So if she is above 62.50, next Friday you collect well, actually you collect the 78 cents right off the bat. You get that money right away. Okay? But you can't do anything with the stock until the time frame's over, which means if somebody buys it from you, they get to collect the dividend. But what do you care? You're collecting 78 cents per share. Okay? Excuse me. All right. That's a sample of how the covered call worked. Now we could go right here, covered stock, boom, right there, and do the 62.5, which is right there. You go. All right, by 10 covered call BMY 22 at 62.5 call at 61.84. Do you see that? You're actually buying the stock for 61.84. The maximum profit is 660. And what are you putting out? You're putting out 61,000. So 660 is a little over 1% for the day. Okay? And if the stock closes above 62.50, you still get your 1% for the day. Okay? So tomorrow being Friday, if you have any money left over, there's a bunch of stocks that you can do this with. Buy it, cut just 1% for the day, and be done and over with. Or 6250. All right, this one's a lot lower, but it's still the same. You know, you buy it, you turn around, you collect the dividend, not the dividend, sorry. You collect the premium and get your little butt out of there, and by the end of the day, you're back into cash. Oops. All right, shall we do one more? Let's try one more. Monsanto. That's Monsanto, yep. Monsanto's paying out 54 cents. MON. Monsanto starts out the year trading at a 114 area, and she trades for like 4 months, drops down, finds the low of the year of 80.85. Climbs back up for the trading range of 89, travels for a couple of months there, jumps up for 105, travels a couple of months there, and then she is right back to the 117 again, which is where she is for the last couple of days. Now let's check out the seasonality for Monsanto. Monsanto's going to go sideways for a couple of days, slowly drop and go sideways again. But do we really want to do that? I don't know. MON, Monsanto. All right, Monsanto is at 117.60 at the moment. That's not really offering squat for the premium for selling that one. It's not doing, yeah. Monsanto ain't worth diddly. $117. Yeah, they're not even gonna let you send out. All right, see the spread between the bid and the ask? 0 and 450, 0 and 1, 0 and 475, 0 and 1. Like, how do they come up with these numbers? I can't do any calculations whatsoever with these numbers. Alrighty. That being said, let's try one more. End tab. Net apps paying 20 cents. All right, NTAP starts out at 35, jumps up to 43, travels about a month and a half there, comes back to the 35, but continues to find the low of the year at 20. From 20, she jumps up to a trading range of 25, travels there for a couple months, back up to that 33 area, and then back to where she started again at the 39. In the meantime, she did hit the high of the year for 45, settling back into the $40 area where she's bouncing off. It looks like a triple bottom, 1, 2, 3. She's bouncing off. She got the 40, 65 at the moment. So let's see what it looks like. In tap. 40.63. There you go. Oh, 40.65. That only going to give you 6 cents. That's not really worth it. Oh, it's in an uptrend. What does the seasonality look like on this? All right, seasonality on this. Looks like she's going to sideways for about a week. After that, she's going down. Down. How could she be going down? She is. Wow. Look at that. She's going to hit a peak here. Then going, she's going to go down. It's like, really? Okay. Anyway. NTAP looks like she could be a play for a very short period of time, for only like a week or so. So if you're going to do it, you might as well do it now. Jump in, take the premium, and get your, hightail it on out of there. For one day, you can get that 20 to 21 cents and sell it for 50. So you actually get 40.71, which is only a 6 cent difference. I don't know if you really want to do that. Kind of stretching it, going for the extra 6 days. For next Friday. Next Friday, looking at 51. So you're buying at 41.50, and you're actually selling it at 41.01. That's how much you're getting for it. So you're making the difference of 35 cents, which not bad if you think about it. It's not as, what is NTAP offering? NTAP's only offering 20 cents. Okay, so if you're going to do the dividend capturing on this, you're going to collect 20 cents. Okay? If we're going to trade it next week, we could buy this right here. Buy the stock at the 40.65. So let's say you get it at 40.65 and you let somebody buy it from you for less than what you paid for it, which is the 40.50. Now you own the stock already. So worst case scenario, you hold on to it and you collect a dividend in 15 days. Okay? However, tomorrow you can collect the 51 cents per share, which is a lot more than what the dividend is. Because the dividend is only 20 cents. Okay? So you buy it at the 40.65 and you sell someone the option to buy it from you at 40.50. You're collecting the 51 cents. Okay? If the stock ends up above 40.50 on Friday, then somebody bought you out and you just collected 51 cents, which is more than what the dividend was. Or if it's below 40.50, you can go and turn around and resell the 40.50 option for the next week. Because see, the 40.50 option for the next week is 69. Now, granted, in 7 days, next Friday, this is not going to be that high because you have the time decay factor. So as time passes on, the valuation of the option gets lower and lower. So by using the dividend capturing strategy, where you buy the stock 10 days prior to, and you look forward to capturing just a dividend alone, great, you're capturing the 20 cents. Okay, fine dandy. If you're doing it on margin, you're collecting 20 cents times 2, which you're collecting 40 cents. Now, if you do it on margin and you sell an option, you collect the 51 cents for here. If you don't get called out, you can collect another premium here. And then, lo and behold, you still have one more week right here before the EX date. So with this company here, NTAP, you got 3 weeks of covered calls that you could do before the EX date. So if you wanted to just collect the dividend, great, fine. If you're happy with that, you're comfortable with it, fine, do it. But if you're going to be buying the stock 10 days prior to the EX date, and you're buying it at a certain price, why not let somebody buy that stock from you for more than what the dividend is? Because the only risk you have is you're not going to collect the dividend. Big whoop. The dividend's only 20 cents. The premium is 51. Do you see how that is? So if you hold out just to collect the dividend itself, you're collecting the 20-cent dividend. And there's nothing wrong with it. Absolutely nothing wrong with it at all. If that's what you're comfortable with, if that's what you want to do, fine, do it. Collect the 21 cents, or the 20 cents, sorry. Okay? But if you buy the stock, you own it. You can do whatever you want with it. Hold it for the 10 days or hold it for the 15 days and collect a premium. Collect a dividend. Okay? Then after you collect the dividend, turn around and sell the stock. Or, better yet, buy it tomorrow, sell an option tomorrow for someone to buy it from you for the exact same you paid for it. That way you're making more than the 20 cents that you would have collected for the dividend anyway. And it allows you to not have your money tied up for the 2 weeks or the 3 weeks. You only have it tied up for a day or two. Okay? So that's where the covered call comes in to make a little bit more profit than just collecting the dividend. Don't get me wrong. Dividends are simple. They're easy. Buy the stock, collect the dividend, turn around, sell it for more than you paid for it. Hey, great. No big deal. All right. That should be able to handle, that should be able to get a good grip on what's going on with that. That being said, let's jump over to Monitor and find out what we actually did today. BMY. I just did that one. Yeah, I said, why not? Let's give it a try. Let's change it. This wants to buy just that. Cancel and replace order. I don't want to buy 10 to 50. How's that? I don't think so. I'm not going to put up $300,000 to make $1,000. Nope, 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 nope. All right, let's get back to where I was. Oh, let's just let that one stay. All right, we got 3 filled orders and 1 canceled order. The 1 canceled order is the PXD 3435. Yeah, that was going a stretch. Okay, so let's look up the PXD, see what she's doing. PXD. All right, PXD starts the year out at 197. Within a month, she finds a high of 234. In about 2 months, she starts falling down to a trading range of 140. Traveled that way for about a month. Again, a couple more months, she gets a low of 107 or 106. Travels sideways for a little bit in that area. Jumps back up to 156, and then she gets a trading range of 182 for a couple of months. And then she drops right back down to 136.93. Okay. So let's look at PDX. Open that up. Now, as long as this stock stays above, where are we? All right, I got the 136, 137, and the 135, 136. Huh. Alrighty. So on this spread right here, as long as she stays above 137, we're good to go. And it's not above 137. Ooh. Because it's 136.93. So that one we'll have to keep our eye on that one tomorrow. This one right here, the 135, 136. She's 93 cents into the money, so it just looks good. So there's a good possibility we'll be making our profit on that one. Potash, we bought that one, so let's see what potash looks like. POT. Hey, potash starts out at 36, travels sideways about 4 months in that trading range. Finds the low of the year way down here at 14. She goes from 36 to 14, so she dropped like 50%. Wow, more than 50%. All right, since that big drop, she's been trading sideways almost 6 or 8 months. And here's where she is now. She's at that $18 area. She's had a nice run. 1, 2, 3, 4, 5, 6 up days in a row. Now, potash, we got the 17.5, 18. So as long as it stays above 18, we're in the money. Okay, so that looks good. BMY, we just put that order in, so that's not going to show. CBI. CBI, we got the 113.5, 114s. She starts out the year at 79, 80 area and slowly drops down to a range of 46. It travels there for a couple of months and then slowly drops down to where she is today, which is the 14, almost $15 area. Now she's had a nice runs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight days on up. So 11 days, I don't know. Could be, maybe not. I don't know, but 11 days in a row going straight up. As long as she stays above 14, we're in the money. Okay, that's CBI, that's good. All right, CY. CY starts out at the $10 area, trades for about 3 months at $10, shoots up to find the high of the year at 16, comes back in a couple of months and finds the low of the year of 6. From 16 to 6, that's almost 60% loss. Okay. 628, she jumps back up to the 14 area, which she's been traveling for the last 2 months. Now that's doubled in price from the low, which is nice. Okay, here's where she is now. She's at 1430, and we got the 1312, which way into the money on that one. So Cypress Semiconductor, we're good to go there. DE, let's look at DE. DE starts the year trading at a trading range of 90, 91 for about 4 or 5 months. Drops down to a trading range of 78 for 4 or 5 months. From there, finds a high of the year at 132. Finds a bottom here at 115. Been going sideways for a little bit. And when we look at DE, we got the 117, 118 spread. So as long as she stays above 118, we are good to go. MDLZ. So let's look at MDLZ. MDLZ is at 4068. She starts out the year at 37, travels about 4 months at 37 area, jumps up to the trading range of 43, and just travels the rest of the year there. She took a little bit of dip at where she is now. 45, 41 and a half, and 40 and a half and 41. We want it to stay above 41. Right now we're losing money on this one. because we got the 40.5 and we sold the 41. Okay, so we might have to end up buying half of that spread back tomorrow, but we don't know. We won't find out until sometime tomorrow. But I will be here tomorrow at 3:30 just to go over the numbers. MDT, we just looked at MDT, didn't we? No, we looked at PXD. So MDT is Medtronics. MDT. All right, here's MDT. She starts out the year at 59. Travel trading range of 64 for about 2 months. Jumps up to a trading range of 74 and travels quite the distance at 74. Finding the high of the year at 89 and settling in where she is now at 81.80. Again, we're looking for it to stay above 82. So that's 2 companies we need to keep our eyes on because we want this thing to stay above 82. So now I have to go up. Whew. Well, we already looked at potash and we looked at PDX. So, all that being said, we'll be back here tomorrow at 3:30 to see how we're doing. But at the moment, we're at 56% for the year, which nice. So half of these I'm a little concerned of, but the other half, actually more than half, we're good to go. So with that being said, this is James from Dividend Stock Talk, and we will catch you tomorrow where we look into some more of these dividend stocks and see how we're going for the week. So